welcome everyone to what I honestly believe is our most important annual show on what's going to happen in the year ahead. And I don't just mean the amazing amount of feedback and viewers that we get for this show. That's the quantitative measure, and it is huge. I also mean the quality of the content, the forecast for the year ahead, like should you buy or should you sell shares and stocks? Should you buy or sell property? It really affects our decisions in our everyday life, this show. How will India do? It affects our country. How will India do versus the rest of the world in 2022? The politics, the macro, global relations. Now, all the data and graphics in the show are researched and produced by the absolutely amazing Ruchir Sharma and his team, of course. Ruchir is widely respected as one of the most brilliant minds globally. And they say that about him even when he's not in the room. We are very, very lucky to have Ruchir join us once again this year with all his findings on the top 10 trends of 2022. Now watch these fascinating findings. I just found them amazing about what to expect over the next 12 months. I learned a lot. I'm sure you will too. So Ruchir, thank you very much for joining us and sparing the time. Thank you very much.
Thanks, Prannoy. Delighted to be back. It's been nearly a decade since we have had this annual tradition, and happy that we are carrying it along.
Wonderful. Shall we just go straight into the graphics because we got so much to cover over the next 50 minutes actually. The first thing you always say, and I respect you for that because I would never do it, let's look at how right and how wrong I was in the previous year, you say. So let's look at what you had said in the previous year, the top 10 trends of 2021. Let's review and get your perspective on what was right and what was wrong. So those are the top 10. Now let's focus on the first forecast that you made, the trend that you made in January 2021 of what was going to happen. Let's see what you said about the first point. You said the global economy would be surging and the stock market would be sluggish. And your review shows this. Growth surged, but actually so did the stock market. Global growth was at 6%, higher than most people expected, but you expected it. So you were different from the rest, and you were right in terms of global growth of 6% is huge. The stock market, the US surged actually. Actually, only two countries really surged, US and India stock market, which I guess is, the US is a huge part of the global stock market. The rest of the world, 8%, more or less average. And fascinating, Ruchir, was performing according to you, your data, China stock market minus 23%, second worst, and the worst is Pakistan minus 25%.
Yeah, we looked at about 60 odd stock markets around the world for which data is available. And so India was in the top quartile. In fact, I think India's exact rank was around 13th or so of the 60 stock markets around the world in dollar terms. And it's just, I guess, sheer coincidence that the two worst performing markets, absolute worst, were China and Pakistan. So something I guess a lot of Indians would like to cheer about.
Okay, let's move quickly on to the second of your kind of top trends. Inflation, you said, is set to rise. And then what is the actual figures? Let's have a look at the data that you actually produced to compare with your trend. Global inflation was 4.8%, while the rest of the economists globally thought it would be 2.7. So you were spot on there, Ruchir.
Yeah, I think that there was so much stimulus put into action, so much disruption to the supply chains brought about by the pandemic and the lockdowns, that inflation was finally set to rise. I mean, for 40 years, we haven't had an inflation performance of this kind in many countries, including the United States. Now, in India's case, inflation behaved a bit better, especially at the consumer price level. And so, in fact, India's inflation rankings improved on a global basis. Like after a long time, India's inflation rankings were similar to the rest of the world or somewhere in the middle. But I think that the key thing here is that inflation really surged a lot more than people expected in 2021.
Right. The third trend, you said that global interest rates would increase sharply. And of course, when interest rates rise, bond prices fall. Now look at those interest rates. They really shot up. Like, how is that compared? This is developing countries in particular. And government bond prices fell by 5.8%. That's the worst since 1999.
Yeah, it's very rare for government bond prices to fall because it's a very safe investment. There are very few and far between years where government bond prices fall. Typically, as you know, government bond prices fall when interest rates rise. They move in the opposite direction. And so as interest rates rose sharply around the world, particularly in emerging markets, with long-term interest rates rising, even in places such as India, where the 2-year paper, the 10-year paper, all those interest rates rose from a very low base quite sharply. Bond prices fell. So yes, it was a terrible year to be a bond investor in 2021.
Right. Your next forecast was, you said, buy property. This is prices are going to go up, really. And if you look at it, in fact, house prices, according to you, rose at the fastest rates, that is 40 years. We're talking about global house prices. India didn't follow that pattern. It went down, but towards the end of 2021, house prices in India have started rising again, right?
Yeah, it's been a terrible year for the property markets in India, as we know, over the last decade, with property prices barely rising. But finally, we're seeing sales are picking up, supply has been constrained, inventories are falling, and in the major cities, prices are beginning to rise. So yeah, it's been a very good time to buy property around the world. In fact, almost too good. It's taking many people to think that property prices are becoming unaffordable, and that's a major political issue brewing in many countries. In India's case, not so as yet, because the affordability still remains relatively good for many people, even though I know that everybody wants it to be cheaper. But generally, property prices have been quite low. But I think that they are started to rise and are set to rise further in the years ahead.
Now, your fifth point, you said the US dollar will decline. And then you produced data to check whether you're right or wrong. Let's see what you said. Basically, the dollar went up a little bit, but just look at it relatively. And when you talk about decline, you talk always relative prices. Bitcoins went up 59%, while the dollar just 6%. Amazing difference.
Yeah, that's the point I made on the show last year, that there is no real alternative to the US dollar in terms of any other currency. The Chinese currency has not been able to take the space. The euro is still embattled by a lot of its internal problems. So when there is no alternative to the US dollar and yet people are searching for an alternative, cryptocurrencies such as Bitcoin are likely to emerge as some sort of an alternative. And that's what happened last year. It was a great year to be investing in cryptocurrencies. In fact, the number of cryptocurrencies in the world has exploded. There are nearly 8,000 cryptocurrencies in the world now, compared to just over 4,000 a year ago. Bitcoin is what we hear a lot about, and Ethereum, but the explosion in cryptocurrencies is telling you that people are really searching for alternatives out there to the US dollar, given that no other currency is being able to fill that space in.
One of the most surprising trends that you talked about, or forecasts that you talked about in January 2021, was about commodity prices, which everybody thought is the end of commodity prices. They're never going to rise. And you said this year is going to be a revival in commodity prices. And in fact, it's turned out to be the best year for commodities for nearly 50 years. I mean, that is a huge length of time. And commodity prices rose 40%. Yeah, A, how did you foresee this? And B, why did it happen?
Yeah, I think that, what's happening here is that, and it's something we'll speak about as one of the trends as well over the next few minutes, is that there is so much pressure to cut new investment in oil, in mining. A lot of it has to do with political pressure, the pressure for climate change, green politics, which is all fine. We all want a better environment and climate out there. But the problem is that we're cutting supply of commodities, and yet the demand for commodities, whether it's driving or it's got to do with even building solar panels and the new green infrastructure, we still demand commodities. So you have demand for commodities going up, supply constrained. It's basic economics that you constrain the supply for all sorts of reasons, but you still keep demanding. Prices are naturally bound to go up, and that's what's happening.
Right. Then in your next point, I'm just going very quickly through last year. I don't know how you can take an exam like this. I would avoid it like the plague. But the next one, you said developing countries around the world will stage a comeback. But that really didn't quite happen. There was a huge gap between the growth of developing countries in 2010, like 7% compared to 2% of rich countries. But now it's almost neck and neck. So developing countries fell back, right?
Yeah, a lot of this has to really do with the slowdown taking place in China. That's what's deflating these numbers a lot. But in general, it's been a very disappointing decade for the developing countries. And I was expecting some sort of a reversal to begin in 2021. There are some signs of that happening outside of China, where the growth rate's accelerating in places from Vietnam to Poland and other places even in the Middle East. But generally, it continues to be a disappointing time for growth in developing countries after the incredible promise they held. A decade ago, we all know how the entire world was captured by BRICS and those kind of concepts, and those stand so badly discredited now.
Right, right. Now, your eighth point, you talked about the digital revolution spreading rapidly in 2021, and the data shows how amazingly correct you were. Look at mobile phone usage or mobile data traffic. It went up by 42% in the year. That's huge, right? Unprecedented, Ruchir.
Yeah, in fact, the kind of data we have consumed over the past year, I'm told that is equivalent to the entire data that was consumed until the year 2016 in history. So really, the way the digital revolution is spreading is quite fascinating. There are more than 4 billion people with a smartphone now around the world. That's more than half of the entire population of the world. And remember, the processing power of a smartphone is similar to what used to be the processing power of the supercomputer when it first came out in the 1970s or something. So everyone's virtually walking around with a supercomputer in their pocket, and that opens up so many options for doing things digitally.
See, Ruchir, I use those old computers and we still produce macro models of the economy. You guys have all these phones. Why? You have no excuse. Anyway, let's move on to your second last one. The rise of new challengers to the big tech companies like, Apple and Google. But if we look at last year, in fact, big tech companies were smashed in China, but kept rising in the US. Just look at that amazing graph that you produced, Ruchir. USA, big tech companies taken a bigger and bigger share of the market, but the challengers have also done well. They've gone up 15%, but not quite as much as the big techers. And in China, the big tech companies just plummeted. Why again?
Yeah, in China's case, there's a lot of concern out there about the way capitalism was going. It was unbridled capitalism. I had shown data, in fact, earlier this year to show that in the year 2020, China produced many more billionaires than even the United States. The Chinese government is concerned about the kind of concentration of power that's happening in its corporate sector. It's concerned about wealth inequality, and of course it wants to maintain a very strong state. So therefore we saw the Chinese government really crack down on the tech sector very hard in China, which is what hurt the stock prices and the entire market valuation of the Chinese tech sector. I'm told that the Chinese tech sector last year lost nearly $2 trillion in their entire value, which is virtually half their value was wiped out in 1 year. So that shows up in the fact that it was a very poor year for the performance of the Chinese stock market, for the Chinese tech names in particular. But what surprises me is just how the US tech names, the mega cap names, they keep galloping ahead, with Apple now the first company to get to $1 trillion. I remember in 2017 when Apple's market cap crossed $1 trillion, it was a sign of a fair amount of conversation, in fact, back then. but now it's touching $3 trillion. So that is a surprise to me as to how long the winning streak of the US mega cap has lasted.
Right, but you were spot on about the end of big tech in China. Finally, your 10th trend last year, January, looking ahead at 2021, you said the end of television. And thank goodness you said in brackets, except in India. What are the actual figures if you look at your data? Again, this is all Ruchir's data, which I'm just reading out. Only country where TV did not really fall, that means the share of advertising, revenues, etc., was in India. Everywhere else they fell, and this graph actually underestimates the amount they fell. So India stayed on. So India is a very sensible country, Ruchir.
Yeah, in terms of, I guess, for the TV business. But yeah, like in all the other countries, what we're seeing is a major decline take place in TV's share in the total ad pie. In India's case, it's quite fascinating that there's been, of course, an explosion in digital advertising, but it's all come at the expense of print. And the share of television in the media pie has remained relatively stable at around 45%. So yeah, one of those things that worked out, I guess.
Absolutely spot on there. Okay, now that was just amazing. I would give you, A++, even when you're not in the room. Yes, 90% marks for last year. Fantastic.
Well, nice of you
Okay,
to
let's
say
look
that.
at the top 10 trends now, Ruchir, looking ahead at 2022. The first thing you're saying, 2022, we will all see a decline in global birth rates, and that will accelerate in 2022. And some of the data looks like this. Just have a look at it.
Yeah. So, Prannoy, one of the fascinating things about this crisis has been, this entire pandemic, is that if you look at most crises in the past, typically after the crisis breaks out, the world is turned upside down. A defining feature of this crisis is that many of the trends that were already in place before the pandemic broke out have merely been accelerated by this pandemic. Now, some of those trends completely make sense, such as increased digitization with people working more from home. So that makes sense. But this thing, I think, has been a bit counterintuitive, which is that we are seeing a decline in birth rates take place around the world in a fairly sharp way. Why is that happening? I think that's something which we really need to know a bit more about, or need to learn a bit more about, because you would expect that as people are spending more time at home, birth rates should increase. Instead, birth rates are falling sharply. The most they have fallen in recent times has been during the pandemic. You can see the data here for China and even places like the United States, that the birth rates are falling here. So the demographic challenge that the world has been facing has only been accelerated by this pandemic, and that has, I think, serious implications for economic growth. We keep on talking, why can't countries like India grow at 7 to 8%? Why can't countries like the United States grow at 3 to 4%? Well, it's because the demographics have shifted significantly. The number of countries now which have a shrinking working age population has exploded. And this is true even in India. The working age population is not shrinking. But if you look at what's happened during the pandemic here, that we don't have data for the entire country, but we managed to get some data just for the city of Bombay. And you can see during the pandemic, there's been such a sharp decline in the birth rates in a place like Bombay. I feel that's pretty representative of what must be happening in the rest of India.
Yes, that is really astounding. That 153 is the annual average rate for those 5 years. And now it's just dropped dramatically. And in fact, it's dropped so much that India's birth rate for the first time is below the global average birth rate. That is incredible, that data.
Exactly. I mean, can you imagine that the amount of time that we have spent fretting about the demographic time bomb in India? We all grew up hearing about that, 70s, 80s. And now the picture has changed so dramatically, where the slowdown in the birth rates has been so significant that India's population growth rate now is also getting to levels which is likely to fall below the global averages. But interestingly, the birth rate for the first time now has already fallen below the global average.
That is an amazing change of perception
Yes, and I
that
think
everybody must recognize fast.
Yeah, and one very important point to put here, this is for me the single most important reason why India will not be able to grow on a sustained basis at 7, 8 or 9%. No country with a birth rate this low and with a population growth in such a decline has been able to grow rapidly. I think this is a point which is just not internalized by many people here. Forget policymakers, even serious economists, when they go on talking to me about why India can grow at 8 to 9%, the problem is that no country with demographics of this kind has ever been able to grow at a rate of 8 to 9%. Just doesn't happen.
Very interesting point, because you talked about this earlier, that your workforce is also not growing, which you need if you want to grow by 7, 8, 9, 10%, right?
Yes, I mean, you need your working age population to be growing by well over 2% to achieve those kind of growth rates. And of course, India can try and correct for those things. For example, one thing which we can speak about at some other point in time is that the female participation in India's labor force surprisingly keeps falling, and that's another factor we need. But the big message here is that it's very difficult for India's growth rate now to be anywhere north of 5 to 6%, given the changing demographics.
Very, very interesting. Your second point, which is really surprising for everybody, you say that China's economic power is currently peaking. It's reaching its peak. Most people think China is about to take over the world, but you're saying it's peaking, or if not already peaked. Look at that. China's contribution to global growth, how much is falling since 2019? It went up a little bit and down again. So that's amazing, Ruchir.
Yeah, there are a variety of reasons as to why that's happening. It goes back to the earlier point about demographics, that here is the shocking thing, which is that from next year onwards, China's overall population is likely to start shrinking. Not just the labor force, which has been shrinking, but China's overall population is likely to start shrinking from next year.
Not just the growth rate, you mean in absolute terms, the number of people will go down in China?
Yes. Wow. And that is not something which anyone expected, even I'd say 3 to 4 years ago. So huge change. So in China's case, the entire growth will have to come from productivity, as its labor force has been shrinking, and now even its overall population is set to shrink from next year. So this is one of the very important reasons as to why I think that China's contribution to global growth is likely to decline. And the other thing has to do with debt, that China has been relying on so much debt to grow very rapidly over the last few years. And now that its debt levels are so high, its policymakers are very worried. They're keen to take China off that drug of taking on more and more debt, and it's already complicating China's economic growth story. So yeah, this combination of too much debt, change in demographics, these are all likely to lead to a decline in China's growth rates far beyond what I think the consensus expects currently.
Another very surprising thing, Ruchir, again, real eye-opener. Everybody thought China-India trade is growing up by billions of dollars and, accelerating. But in fact, the China's trade with India is dropping by 0.4%, which is a lot, while it's going up with Mexico, Russia, Brazil, Taiwan. It's actually trade with India is falling.
Yeah, so this was happening even as China's economic might was increasing over the last decade. These are decadal figures. But I think that generally the point I'm making here is that China's, obviously a very large economy, will remain very important, but the margin, its influence in economic terms is likely to decline. And with India also, that trend is likely to be accelerated in the years ahead.
So Ruchir, let's move on to your third top trend of 2022. You're talking about global debt trap deepening. You've talked a lot over the last 3-4 years about global debt, but the trap now has deepened. If you just look at the data, it is shocking. According to your data, spiked during the pandemic.
Yeah, it spiked during the pandemic and has taken even more countries deeply into debt. So you can see here the trend over the last 2 or 3 decades that, when I first got into this business of investing, there was not a single country in the world which had a debt to GDP ratio of more than 300%. Today, there
That's
are 25
1998.
countries.
You're talking about 1998 where there was zero country, but you were not born in 1998, were you, Ruchir?
Well, yeah, I mean, it's back to 1995, in fact, when I started investing. But yeah, at that point in time, there were no countries with a debt to GDP ratio of more than 300%. Today, there are 25, from China to Japan, United States, a whole bunch of European countries. And that is a very big reason why it is so difficult for interest rates to go up. We are so dependent on debt, on servicing that debt, that I think it's a real problem.
Pointed out that India's debt is high for, if you compare them with similar economies. Look at that. Vietnam is higher than us, but Egypt, Indonesia, Bangladesh have a much lower debt as a percentage of GDP. So India's debt as a percentage of GDP is 175%. That's very high.
Yeah, these are total debt numbers. It includes government debt, all the private sector debt, which is corporate and households. So we put all the data together out here, and I think that at one level, the fact that India's debt to GDP ratio is not above 300% is fine, but generally the lesser advanced countries tend to have lower debt to GDP ratios, and for a country with a per capita income of just under $3,000, India's debt to GDP, overall debt to GDP, is quite high, largely because of the government debt. The government and the related sectors their debt levels are relatively high for a country of this per capita income. So that's something which is obviously concerning. The only good news there is that most of the debt is owned by domestic institutions. Very little of this is owned by foreigners. So when that happens, at least the currency tends to be more stable.
And one of the things that comes out of this, you say that interest rates really don't have very much room to rise any further. I mean, if you look at global stocks and bond markets, how much they've grown, compare them with GDP. In 1980, they were just about the same as GDP, a little more. Now they're 4 times GDP. That's just huge.
Yeah, this is the double-barreled effect that higher interest rates can have, which is that if interest rates go up, not only does that really hurt you on the debt side because there's so much debt and it becomes harder and harder to service that, but also the fact that the stock markets, the bond markets around the world are so big, and so much of that is dependent on a very low interest rate environment. So this is something that we have to be very sensitive about, that if interest rates start to go up, both the asset markets and the debt serviceability becomes a lot more difficult.
Now, the other interesting point is that, yes, inflation will rise, you say, but it may not hit double digits. As a lot of people are saying, it's going to go through the roof. It's just like unprecedented. Now, why do you say that?
So firstly, for some structural reasons, I think inflation is on an uptrend now. And so reasons that we have already foreshadowed in this show. One is the fact that as you see a decline in population, you see less people entering the labor force, that sets up the platform for higher wages. So one is population decline. Second is an environment of deglobalization where countries are becoming much more protectionist. There's obviously less competition there. Then in general, a trend we'll speak about in this show as well, productivity has been relatively weak with so many inefficient companies operating out there, zombie companies as we call them. And that's another reason why we're likely to see higher input costs with lower productivity. And in general, there is very little appetite for any government to engage in any kind of austerity. As those debt numbers shows that, historically, governments would take on more debt in times of crises. Now they take on debt in both good and bad times. So the governments are on a spending spree in general. So these are some of the long-term reasons why I think inflation around the world is on an uptrend after being on a downtrend for the last 40 years. Having said that, there are some immediate checks and balances. One of the points
that you say, you're saying that populism, that's part of winning elections, winning votes. We move on to your next interesting. The first point kind of goes against that, because you say, inflation prices will not rise too much because government stimulus will be set to decline this year. Now, if there's no appetite for austerity and is populism, that slightly contradicts. Explain that. And you said price spikes in key sectors like transport and lodging and housing may actually ease. And this is important. You said tech advances can still restrain the price rise.
Yeah, so in inflation, my sort of forecast is that this is a 2 steps forward, 1 step back kind of process. So I outlined the structural reasons why inflation is likely to increase, but immediately in the year 2022, there could be some constraining factors. So yes, in general, the government spending is likely to keep going up, but the stimulus was so heavy and so intense in 2020 and 2021 that in 2022, just some hiatus will take place in terms of fresh stimulus, I feel. So this is more of a hiatus rather than an end to anything. So I don't think it's a contradiction that in general governments are more populist, but in 2022, mathematically, it'll be hard for them to keep spending at the same rate as they did over the last couple of years. And briefly,
because they may do too much and get into trouble on the election front as well.
Exactly. We're already seeing some pushback of that in the United States, that a country that has been very keen to stimulate at any excuse, you're finding there that even some of the Democrat senators are now wary of putting in more stimulus because inflation is now the topmost concern of the US voter. So that natural checks and balances are still there, that the focus is shifting now from just going all for growth to also constraining inflation a bit. So therefore, I feel that this inflation is on a structural uptrend, but it's a 2 steps forward, 1 step back process. It's likely that in 2022, the inflation performance is not as bad because of that 1 step back with some checks and balances from technology to just the exhaustion with stimulus setting in.
Now, Ruchir, you talk about a really important phenomenon which you call, and I think it's become widely used now, greenflation. Now, is greenflation, you mean green politics meant to reduce oil supply. But what is happening is oil supply, there's a decline in investment in oil supply, there's a decline in investment in minerals. But if we move on, we can see that in fact, there's still a lot of demand for minerals. So we are not investing in minerals, but we are demanding it and using it. So it's going on. It's just contradictory to what green should be. You say we are going green, but you're using more. Copper demand up 213% by 2050 and aluminium demand up by 322%. So you mentioned that India is particularly vulnerable to greenflation because India is a large importer of commodities. Just look at that. These are commodity imports, India, China, Turkey. So just tell us how worrying is greenflation for you?
Well, it is a big concern because as we spoke about earlier, that we all want a greener planet. But the problem is this, that to build the greener planet, we need to invest in a green infrastructure, which is whether it's solar panels, it's electrical vehicles. But to do that, you need copper, you need aluminium. Those are some of the inputs that you need to build that green infrastructure. So that's the contradiction here, which is that building a new green infrastructure requires some of these polluting metals. But if you keep cutting supply, then the prices of those metals keeps going up. And even on oil, a lot of the consumption today is still based on fossil fuels. But you're cutting supply prematurely because it's so difficult today in the world anyway to find new investment in oil fields. So that's the contradiction that you have out there, and therefore we are already getting greenflation, something which is contributing to inflation and likely to contribute even more in the years ahead if the current policies continue. So India obviously needs to be wary of this.
We want a greener world. So we're not investing in oil and minerals, but we're demanding more minerals, more oil. And so we're just raising the prices of those commodities by not investing, but demanding as much. So we're just contradicting ourselves in our behavior.
Yes.
Your point number 6 says there's a productivity paradox, and that is persisting. And by that you mean growth in productivity has been falling for years. This annual productivity growth, and I'm really shocked at that graph. I don't think too many people are aware of this. Everybody thought tech would have increased productivity, but this is shocking, Ruchir.
Yeah, it's one of those mysteries out there that why is productivity falling, and even during the pandemic, we saw a marginal increase in productivity in some countries such as the United States, but in general, we didn't see a big bump. Now, there's some structural reasons why this is happening. It's because maybe we have too much debt, which is supporting a lot of inefficient companies, not allowing enough new companies to rise out there. We have a lot of government interference and regulation around there, which is also undermining productivity. And of course, some people argue that the new innovation we are seeing tends to be much more, if I can say so, fun-loving and frivolous rather than very serious, whether it's got to do with gaming or other activities, that we are not seeing the benefits of new technology flow to productivity. So yeah, this is one of those paradoxes out there, that we are in the midst of a tech boom, and yet we are seeing productivity decline. And I think that as the most fascinating data here, I think, was what we have next, which is that during the pandemic...
That actually surprised me a lot, and actually slightly disappointed me, that working from home, I thought your productivity would go up. You don't have to spend time in traffic. You don't have to... in fact, Indians are late for meetings, but not Zoom meetings. We are spot on time. But your data shows work from home, there's more hours spent and less output created. During the pandemic, the increase in hours worked from home up 18%, and output growth down by 0.5%. One thing, I hope people don't claim they're working at home when they actually just got their video off.
Yeah, this is a data I got from a survey that was carried out, by one, like in Asia, which is of thousands of people, which showed that they are working much longer, but in fact the output there is slightly lower for the longer hours worked. So productivity in a way has gone down, not up, during the pandemic, if you go by this survey.
I want to delete this graph and censor it. We all want to work more from home. I think you're being a very negative person. Oh, sorry, negative is a good word to use these days.
Exactly.
Okay, let's move on to point number 7, is that there is increasing data localization. And this is what your findings show, in fact. The reasons for data localization, there's a sort of data nationalism now. Developing countries following a kind of Chinese authoritarian rule, and that we will control our data and our tech. And there's this Western nations focus on privacy and not letting let others snoop on each other, although they do it in different ways. So people are keeping the data within their country. Is that right? They're not allowing it to cross borders. Is that what you're saying?
Yeah, this is a very new development because we have spoken a lot about deglobalization, and by deglobalization we have generally referred to increased protectionism in the trade of goods and services, sometimes even capital flows and even migrant flows. But the assumption everybody had till even a couple of years ago was that data had no borders, and so it could keep crossing borders, and that trend would go on. And the importance of data is huge now. I think it's the US Chamber of Commerce that put out a finding to show that data now contributes more to global growth than the trade in goods and services. So it's a huge trend out there in terms of...
Right, that's huge.
Exactly.
But Ruchir, one of the points you say, following China's authoritarian model, so many countries say we are not going to let our data go across borders because other countries will snoop on us. But actually the authoritarian trend means the countries want to snoop on their own citizens. And in fact, in that context, we'll move to the next graphic. It's a bit worrying. The index of data regulations and localization, China, then Saudi Arabia, then India. So we're the third worst in terms of, this kind of what you call an authoritarian trend in China.
Yeah, this is an independent finding based on the amount of restrictions that governments are putting in place to keep the data at home, or other restrictions on data, and India just happens to show up third at the wrong end of the scale on this metric.
Very, very interesting. Move on to the eighth trend for 2022, and that is what you call bubblets. Bubblets will deflate. Now, what exactly is a bubblet? And this is what you identify, how you identify a bubblet. It's just like a good idea, but it's just gone too far. And classic signs include prices have doubled of that bubblet in the last 12 months, and a rush of newbie investors. By that you mean people who are not professional investors who really study the market. And just explain this whole idea of bubblets. And you mentioned cryptocurrencies, tech stocks with no earnings, clean energy stocks which people just buy from their heart, and SPACs. If you explain all these, it's a fascinating trend.
Yeah, so
Bubblets.
we've all heard about bubbles, but obviously the issue is that how do you value a bubble? How do you know something is a bubble? And I've come up with this new concept of bubblets. So what's the difference? Bubbles is something which I think are very big and cover very big markets, right? So like you had a huge US stock market bubble in 1999, 1929. India has had its own stock market bubbles out there. Now, the signs of a bubble and a bubblet are often the same, which is that you end up getting a lot of speculation, over trading, over ownership of a certain number of stocks in there, and valuations obviously get very high. The difference between a bubble and bubblet, in my view, is that bubble covers a very big part of the market, bubblet covers a very specific, smaller part of the market. Now, so that's what I've said, that it's very hard to make the argument that everything in the world is a very big bubble here, because stock markets have gone up everywhere. Maybe that is the case, but I feel a bit more on firmer footing by saying that these 4 to 5 corners of the market are particularly showing signs of a bubble, if not a complete bubble, and so therefore I call it a bubblet. And in this regard, I've identified...
It's a really an important actually warning, and if your next 3 slides, in fact the third one is really is worrying, I think, for most of us. If you look at the next one, it's data which you produced, and it shows that bubblets actually fall 70% in 2 to 3 years. So they rise 100% in the year before they hit their peak, and then they drop 70%. So that's very worrying of when you invest. The next one, you should actually shown how bubblets have fallen from their peak. And if you look at Bitcoins, that's one of the bubblets, down 57% from its peak, green energy down 53%, tech with no earnings down 49%, and SPACs down 39%. And finally, and this actually was a chart and data that really worried me, and I think would worry a lot of people. So Ruchir, what you mentioned about bubblets is also reinforced and very worrying in your next top trend, the top trend number 9, where small investors mania cools. And what do you mean by that? This chart that you produced is just astounding. What is happening is types of investors in stocks and shares has changed. Professional management, senior management, they're selling. And who's buying? Small investors, households, who really are kind of newbies, I think you called them earlier. But they really don't know that much about the market. So the texture of the market is changing from professional to people who don't know that much and could be taken for a ride. That is a worry, isn't it?
Yeah, this is data we got from the US, where insider selling rather, as we call it, is at the highest point that it has been for the data series that's been produced. So it's like insider selling over the last year. On the other hand, the amount of flows into mutual funds that went in the United States in 2021, and typically the investors in mutual funds tend to be small retail investors, those flows last year I think were greater than the flows of the preceding 19 or 20 years. So it's really a huge amount of interest and flows. Someone's buying and selling always in the stock market. Issue is that who is the more sophisticated buyer or seller? So if the insiders are selling and the retail investors are buying on the other side, at least intuitively and anecdotally, that feels a bit concerning.
Yeah, and it does worry you that the quality of people, the knowledge of the market, they may have knowledge of lots of other things, but the entry here in your next graphic, the numbers are astounding of how the market is changing, the texture of stock markets. There's a huge rise in small investors. That's a new global phenomenon.
And true for India as well. Yeah, so as we show on this graph here, that just
11 million up to 30 million in basically
2 years.
2 years. That's just phenomenal increase.
Yeah, and retail investors are now dominating this market. More than half the volume on the stock exchanges now is retail investor volume. You know, small investors speculating a lot. In places like the United States, they tend to do a lot of day trading, buying very low value options and other kind of instruments to play in the market. So it is concerning. Now, at one level, these numbers are still low, that in India, you only have 30 million investors and a population of over 1 billion, but it's the pace of increase which is a bit concerning, that from a very steady increase that took place for much of the last decade, you have an explosion all of a sudden, and the kind of stocks they're buying are often these very low value kind of stocks, and a lot of speculation going on there. And this is not just true of India. I said the US, even places like Europe, in Asia, small countries like Philippines, you're seeing a lot of this happen. So this is all the fallout of the incredible amount of liquidity that central banks have thrown at the system during the pandemic.
I really found this just absolutely amazing data. And it also brings the worry that a lot of small investors may get hurt. You know, if this if there's a drop fall in they're into Bubblets, or they don't know enough. And when a big investor gets hurt, and we won't mention who, it doesn't really matter. But you think 30 million small investors, that really is a worry. Your final point is really interesting. Metaverse, that's the catchphrase these days. But you're saying it's really a lot of hype. The physical world is still more important than metaverse. In fact, the use of the word metaverse this year by corporates has gone up phenomenally. It's gone up 100 times what they used to use before. It's like the in thing to say, we're into metaverse, right, Ruchir?
Yeah, this is some data, I think, which was compiled by Bloomberg, where they looked at the transcripts of the quarterly calls that managements do and found that it's become so fashionable now to speak about the metaverse. A lot of people don't even know what exactly the metaverse is all about. It's really about how everybody will live in a virtual world where all activities will be done virtually, from going to college or learning, and even shopping and gaming. All sorts of things will be done virtually in a three-dimensional kind of world. But I think that the point being missed here in all this hype is that people still want physical goods. They're still buying homes. They're still buying cars. And there's so much investment that's going into the new economy and very little that's going into the old economy that it's leading to some imbalance. Next graphic,
you've got the data on that. Just have a look at that. How much money is going into the new economy and how much the old economy. In fact, now you point out, Ruchir, that investment in new economy is rising and it's just about overtaken the investment in old economy. That's been falling for a long time, and now they've just crossed. But you did say the demand for old economy is still rising. Youngsters, millennials, and Gen Z, you call it Gen Z, going for home loans. They're demanding cars, and wages are rising for truck drivers. and others were threatened by automation. So this is contradictory things that are happening, and that you've shown throughout your top 10 trends. So much perception is so different from reality.
Yeah, a lot of echoes here, right? Even with the greenflation theme, that where is the new investment going and where is demand? So of course the new economy is becoming more and more important. There's an explosion in digitization as we have shown, but people are still demanding homes, still demanding cars, still demanding commodities, and I think that not enough investment is going in those places, and there's too much investment going in the new economy. So that for me is like a common theme, I think, that runs through the top trends, which is that there's a big mismatch.
As you kind of do a quick summary, let's just look at the top trends, and you can the whole chart. This will all be available on ndtv.com, and you can look at it in detail there. But Ruchir, overall, summarize what you're seeing in the top trends of 2022.
So as I said, there are some echoes, like out here, which is the disconnect that's taking place between what people are demanding and what supply is out there. I think that it looks like that there are risks building out there, with interest rates set to rise even further, and that could deflate some of the optimism and some of the bubblets out there. I do feel that countries like the United States, the speculation is much more than in some of the emerging countries. But I think that, we just, in terms of just have to also see what happens with the pandemic. But to me, as we started at the outset of the show, that it's quite fascinating that how the pandemic has merely accelerated many trends that were already taking place before March or Feb of 2020. And so I think that that's really going to be out there. But, so much also really depends on how life returns to normal or not. As I keep saying that, God made epidemiologists to make economists look smart. So those forecasts have been...
Epidemiologists and Bengali economists neck and neck, on only time will tell what will happen. But Ruchir, I found this year particularly fascinating because you showed the difference between perception and reality and many worrying signs. And I think all our viewers will really study this carefully and act on this kind of solid data. Thank you once again, Ruchir, deeply for going through this with us. And I know how hard you work for it. For once in your life, you did do a little bit of work. Thank you very much.
Thanks, Prannoy. Always a delight to do this. And I hope that at least for India, the good times come back, or at least roll on from the stock market after the phenomenal year of 2021.
Good times, as we Sardar say, hona. Okay, bye. Bye.